Hey guys. All right. So, of the 304.53 million shares outstanding, as of July 30th, 71.3 million are directly registered, which is 27.28% of the free float. The free float being 256.93 million shares. Um, Bullish stuff. Sales are decent this year. Inventories are up. Which is GameStop's primary asset, so that's not bad. Also, we're moving into uh like holiday season, so we'd expect inventories to grow. That's normal. I see a lot of people kind of commenting and freaking out about it. SG&A is down 14.3%, which is huge. GameStop's been spending a shitload of money on SG&A. If you want to know where their cash is going, it's mostly there. Again, that's what we expect them to do. It's a growth company. They didn't get that money not to spend it, right? Uh, Maybe we wish they'd spent it on other things, but maybe we don't. Um, but sales are doing fine. I think a little bit down over the previous quarter, uh, previous year, a little bit down, but only like 50 million in net sales down over last year. And remember, last year it was stronger in the news cycle and the economy was a lot better. So that small of a difference, I don't think is huge. It seems like they're performing just as well. If SG&A had dropped a little more, we would have had positive EPS. I think we're close to positive EPS. Cash is down a lot, I know. But they still have like a billion on hand. SGA stands for Selling General and Administrative Expenses. Yeah, they still have a 500 million credit line. But only negative 36 cents EPS, which, um last quarter was what? Last quarter was negative 52 cents, so that's good. Yeah, no real debt. Just that French loan that no one's ever gonna pay. Is your free float correct? It's from the 10Q. What's up, Sick Coyote? FTX allows tokenized stock trading. They already do. They already have tokenized stocks. No one trades them, but they're there. Would GME rocket on a positive EPS? I mean, it would definitely go up. Starting to show positive EPS, especially over 2 quarters, is a sign that the company has turned around, right? That will attract institutional buying. What percent are institutions? It doesn't matter. It's all just ETF holdings anyway. It's not like locked up ownership. A better question would be what percent of the free float are mutual funds, because those shares won't be lent. Most mutual funds aren't allowed to lend their shares. And I have no idea. I'm sure you could look on Fintel and get an approximation. What trading platform is that? Oh, it's WeBull. We're still gonna open at 24-ish. I mean, I think we came in at expectations. We might open at like 25, 26. The interest on the stock right now is definitely to the short side, so I don't think that's gonna flip. There's still a shitload of puts open. They're gonna continue pushing down IV and shorting probably for the next week and a half. Well, week and 2 days. I think GME will continue to drop into OPEX. I mean, this bounce offers a little bit of relief. I sold September 1635s. Would you buy back immediately or let them ride? I mean, I sold the same thing, and I'm just going to let them ride. You think institutions will view DRS numbers as bullish? No. They're counterintuitive to an institution's interest. Institutions don't care if there's other long shareholders. They want to be able to buy up large swaths of the stock and own it. And by DRSing shares, you increase the volatility of the underlying, which is not an attractive proposition for any institution. They like to buy up ownership stakes of companies and leverage that against the debt when they start loaning that company money. What's FTX? It's a crypto platform. Sounds like they're progressing on the turnaround. Yeah. Any numbers here you don't like or are cautious about? I'd watch free cash. The lower that gets, the closer we get to a share offering. Hold on. I don't think we need last year's cash. There. But there are large swaths of stock available, as many as they want. There are infinite shares of GME. I know. I'm so sorry. I'm driving big time right now. I missed the beginning. Can you quickly let me know what's happening with FTX? They announced a partnership with FTX. It's not very descriptive. Otherwise, we probably would have seen a little bit more of an after hours run. But they're going to be offering, or partnering with FTX for digital products. It's good. It's bullish. They're big, right? They're big. They're in the news cycle. I like it a lot. It can attract more interest to the NFT marketplace, but crypto's still not doing well right now. Probably won't complete this like bear cycle for maybe another like 3 to 6 months. I sold 24 cc's weeklies. Did I dodge the bullet by a hair? That's awfully fucking greedy. Maybe not. I mean, we'll have to see if the market's still moving up, right? And that's going to put pressure on GME's price. So some wiggle room there would have been better for you. Cage put their pickle in my jar. Very nice. Thank you so much, Cage. Did I see that right? There will be guidance on the call. I didn't hear any. Or I didn't see that section. Maybe. Guidance is good. RC is going to be a trailblazer moving to tokenized stock. We'll see about that. There's a lot of problems with doing that. I know you're joking, but some people seriously think that. Infinite shares available? What do you mean? Supplemental liquidity provisions throughout the market via direct market makers and ETFs. Remind everyone that GME is still very cash heavy. Yeah, I mean they have plenty of cash. I mean it's shrinking. They are going. They have a burn rate, and it's quick, right? Like cash is down. Mm, cash is down. And almost 389 million, 390 million from January 29, 2022. So there's a burn rate on that cash. And when they run out, they either stop growing or they issue more shares, right? Yeah. Like I said, about 6 quarters left. Or take on debt. Not a great time to do that, though, right? I sold this week's 25 CSP. I guess I'm covering them tomorrow. Yeah, or, just see what happens. If the SPY gets rejected off 400 and we see another, 100 BPS downtick in the market, it's going to drag everything down. I think serialized stocks means a lot, and I can certainly see him trailblazing that. Be trailblazing his company into a dead end, and he knows that. I don't think there's any question that that's not going to happen. I can't find a part about FTX. Could you give me a keyword I can search on the 10Q or something? I don't know if it was in the 10Q. I think it was in the other document. They said it was a press release, Business Wire, 4:10 p.m. Announced we'll be entering a partnership with FTX US. FTX, the partnership is intended to introduce more GameStop customers to FTX's community and its marketplace for digital assets. In addition to collaborating with FTX on new e-commerce and online marketing initiatives, GME will begin carrying FTX gift cards in select stores. It's like not that big of a deal, but it's bullish, right? I mean, it's good news. It's better than bad news or no news. Yeah, it's better to go to the shareholders than the lenders. Kajimi issued tokenized stock on FTX's dividend shares. Okay. I mean, if you want GameStop to have to combat years of lawsuits, sure. They should just start selling stock in their stores. It's not just crypto securities. It's just a crypto marketplace. We got the calls in 2 minutes. GameStop selling FTX gift cards seem like AMC announcing partnership with GameStop that GameStop doesn't know about. During the term of the partnership, GameStop will be FTX's preferred retail partner in the United States. Crypto pumpers buying at GME sounds good. Brings up sales, who cares? Would you like to round up your bill to 23 even and buy a fractional share? That's the way to do it, right? Just would you like to buy a fractional share for someone who doesn't own one? And then every month, GameStop can do a share giveaway. The float will be locked in no time, guys. Yeah, GameStop's not a brokerage. They can't do that, okay? Jesus Christ. Before you guys run away with that one. Current year includes the impact of stock-based compensation, forfeitures partially offset by cash severance costs related to. Yep. I don't think they want to issue more shares right now. I think that'd be a hard sell to the C-suite. Yep, I'm starting the call.
Good afternoon, and welcome to the GameStop second quarter 2022 earnings conference call. Please note that certain statements made during the call constitute forward-looking statements made pursuant to the safe harbor provisions of the Private Securities Litigation Reform Act of 1995, as amended. Such forward-looking statements are subject to both known and unknown risks and uncertainties that could cause actual results to differ materially from such statements. These risks and uncertainties are described in the company's earnings press release and its filings with the SEC. The forward-looking statements today are made as of the date of this call, and the company does not undertake any obligation to update the forward-looking statements. I will now turn the call over to GameStop CEO, Matt Furlong.
Thank you, and good afternoon, everyone. I want to begin by reiterating the deep appreciation we have for our stockholders' unrivaled enthusiasm, passion, and support. As we work to transform GameStop, these remain unique tailwinds for us, ones we always recognize and value. I also want to take this opportunity to thank everyone across the organization for bringing continued focus and intensity to our mission, particularly during an active Q2 that represented a transitional quarter for us. Before covering the quarter's specific initiatives and results, I want to provide a high-level update on where we've been and where we're looking to go as our transformation progresses. When our board began turning over early last year, GameStop was saddled with significant debt, decaying systems, limited employee depth, and a host of other issues. This is why we spent the second half of 2021 and the first half of 2022 making up for years of underinvestment in modernizing the business. The upshot is we now have a more diversified product catalog, strengthened fulfillment network, improved tech stack and e-commerce presence, and fortified corporate infrastructure. Thanks to these improvements, including our SAP implementation, we're able to start focusing on a new set of priorities that include achieving profitability, launching proprietary products, leveraging our brand in new ways, and investing further in our stores. During Q2, we took steps to support each of these new priorities. With respect to pursuing profitability in the coming quarters, we right-sized corporate expenditures and headcount following a period in which the company had hired more than 600 new individuals. These actions, combined with the elimination of one-time expenses in Q1, contributed to a 14.3% reduction in SG&A. We've done this while improving our e-commerce experience and reducing free shipping to customers to 1 to 3 days. We're going to retain a strong focus on cost containment and continue promoting an ownership mentality across the organization. On the product front, our enhanced tech capabilities allowed us to follow the launch of our digital wallet with the launch of our new marketplace that allows gamers, creators, collectors, and others to buy, sell, and trade NFTs. The launch of our NFT marketplace supports GameStop's pursuit of long-term growth in the cryptocurrency, NFT, and Web3 gaming verticals, all of which we expect to be increasingly relevant for the collectors and gamers of the future. When it comes to accretive partnerships, we've been actively
Thanks,
exploring
Hugo.
opportunities to strengthen GameStop's offerings and increase brand visibility. We're building on the momentum established by our previously disclosed partnerships with organizations like Immutable and Loopring, whether it be through new relationships that support our commerce business, blockchain group, or both. The deal we just announced with FTX is a byproduct of our commerce and blockchain teams working together to establish something unique in the retail world. Lastly, when it comes to investing in our stores, we rolled out an improved compensation model for U.S. store leaders. Each of these store leaders is being given a time-based equity grant of $21,000 that vests over 3 years, as well as the opportunity to earn additional compensation every quarter via a performance-based equity grant. In conjunction, we're raising hourly pay for certain store associates. These steps were taken to help us enhance retention and recruitment of passionate, quality talent. When we think about the GameStop of the future, we expect our stores to help us maintain direct connectivity to customers and sustain localized order fulfillment capabilities across more geographies. This is why, even as we continue evolving our e-commerce and digital asset offerings, stores will remain a critical piece of the company's value proposition. Taken together, we believe the aforementioned steps can help us attain profitability in the coming quarters and produce additional revenue growth over the long term. Let me now turn to our financial results for Q2. Net sales were $1.136 billion for the quarter, compared to $1.183 billion in the prior year's second quarter. Sales attributable to new and expanded brand relationships remained strong. It is also worth noting that sales attributable to collectibles, which is a segment we intend to grow over the long term, were $223.2 million for the quarter, compared to $177.2 million in the prior year's second quarter. SG&A was $387.5 million, or 34.1% of sales, compared to $378.9 million, or 32% of sales, in last year's second quarter. As noted, we had a strong reduction in SG&A on a sequential basis versus Q1 of this year, and we're taking further steps to reduce SG&A on a go-forward basis. We reported a net loss of $108.7 million, or 36 cents per diluted share, compared to a net loss of $61.6 million, or loss per diluted share of 21 cents in the prior year's second quarter. There were no major one-time transformation, transaction, or related costs during the period. Turning to the balance sheet, we ended the quarter with cash and cash equivalents of $908.9 million. We continue to maintain a sizable cash position, even while investing in inventory to sustain strong in-stock levels and mitigate the full impact of lingering supply chain issues. At the close of the second quarter, we had no borrowings under our ABL facility and no debt other than a low-interest, unsecured term loan associated with the French government's response to COVID-19. Total liabilities compared to the second quarter of last year were down $237.8 million. Capital expenditures for the quarter were $20.5 million, up $7 million from last year's second quarter, reflecting investments in our technology and enterprise systems. We anticipate CapEx will remain at modest levels. In the second quarter, cash flow from operations was an outflow of $103.4 million, compared to an outflow of $11.5 million during the same period last year. Inventory was $734.8 million at the close of the quarter, compared to $596.4 million at the close of the prior year's second quarter. In terms of an outlook, we're not providing formal guidance at this time. It is worth noting, however, that our ongoing engagement with key suppliers is positioning us to receive stronger supply of next-generation consoles in the months ahead. I want to finish by reinforcing that we're working to accomplish something unprecedented in our industry: transform a legacy brick-and-mortar retailer into a technology-led organization that meets customers' needs through stores, e-commerce properties, and both digital marketplaces and new online communities. Our path to becoming a more diversified and tech-centric business is one that obviously carries risk and will take time. This said, we believe GameStop is a much stronger business than it was 18 months ago. I'll leave it there for this quarter. We look forward to driving more progress in Q3. Thank you.
This concludes today's conference.
Did he
You
just
may
like go in
disconnect
another
your lines at
room
this
for
time.
the end of
Thank you
that?
for your participation.
All right. I'll try to answer questions as you have them. Not a lot of forward guidance. Continuous reduction in SG&A will lead to profitability. Which is, if you go back to the last earnings call stream, I said that. So they are pulling back. They're fulfilling their promise of pulling back on reinvestment, and SG&A is shrinking, down 14.3% this quarter. Who knows what it'll be down next? That's a big deal. Positive EPS is very important for GME's multiple. GME's, it is not currently trading at a multiple that would be acceptable for its business. So as it moves into e-commerce and starts to get more and more into e-commerce and starts to get better multiples, and maybe we see some realization of these NFT promises, having positive earnings will be huge for that. Especially if we move positive from negative 35 cents a share, because the way, it's stupid, but a lot of buying occurs based on the percentage move. And moving from like negative 35 cents to like positive a penny is actually a huge percent change in earnings. And the institutions buy into that, believe it or not. Do you think positive EPS is achievable next quarter? I would say, because of economic conditions, I wouldn't expect positive EPS till the Q4 report. But there is a chance for it in Q3. Yeah, don't worry about the stock price. None of this is going to really affect the price of the stock right now. A little bit. Institutions will buy into the idea of earnings moving up, but not heavily. They will wait, especially if we hit a low stride in the cycle, like if we move down into that $22 range, $20 range, we'll start to see a lot more institutional buying at those levels. Closer to book or fair value. I already went over the shares DRS. I'll bring up the figures again. If I can, yeah, I can't go back that far. Never mind. I had them earlier in the stream, all the earnings report figures. I don't think we see positive EPS until the Q4 earnings report in 2023. Yeah, I agree. There's a possibility that we see it in Q3. A slim one, though. Really, for Q3, we should actually expect greater expenditures as they bulk up inventory into the holiday season. 27.7% of free float DRS. It's 27.28%, but yes. Just, get it right. FTX is a crypto marketplace. It's not significant yet, and it's definitely not special. They tokenize securities, but so do a few other marketplaces. They're selling gift cards for FTX. We don't know the extent of the partnership yet. They haven't weighed in on anything else. So you could speculate all you want, but it doesn't necessarily mean anything. Besides, they've partnered with them. We'll still see cash outflow by Polar Bear. Anyway, what percent of Ivy Crush to be expected? 30, 40%? Um, let me see what IV30 is right now. Because I should have IV30 for close. IV30 for close hits. Like 115.26 IV30. So, I mean, probably a move down. I would say maybe back to right where it was at like 106, 104. Blockchain team is working directly with FTX, which I thought was interesting. Yeah, supposedly they're going to be offering products together and stuff like that. So we'll see what comes up. It could be interesting. I agree. There's a lot of potential for NFTs that aren't really its current use case. I think that's something FTX may be interested in. So, the partnership could be very good in the future. Until we hear more, though, I don't know what there is to speculate on besides what they told us. 23% of all shares, 50% of shares available to retail. I mean, technically, you can buy as many shares as you want. They'll make them available. What happens if DRS percentage keeps rising? Let's say it hits 33%. The stock gets slightly more volatile. GME earned 0.4 million on their NFT marketplace in Q2. Thoughts? That's pretty terrible. That's less money than I made last quarter. Explain like I'm me what FTX is. It's a crypto marketplace. Do you think we hit 24 this week again? Probably. Since GS? Okay, GS is Goldman Sachs. To keep stuff close to the chest, I bet they won't offer guidance as long as the CEO board is in place. Yeah, I don't think they have any intention of offering any guidance at this time. It seems pretty obvious that they have no intention of ever offering any guidance. And that may be something shareholders just have to get used to. At least until, yeah, there's a change in the board or something like that. Or until we start to see larger institutional investment, because they'll demand guidance. I suppose I was thinking about Superstock for. I suppose I should thank Superstock for making my CCs more profitable. Absolutely. Compared to any other similar company, is this one any good? Yeah, it's quite a good company actually. Very little debt going forward right now. Room to expand margins versus many of their competitors, which will have to pull back on them as the economy tightens over the next 6 months to 2 years. A lot of potential, and the more efficient they get, the better. What does trading on multiple mean in relation to earnings? Well, you trade on price to earnings ratios, the price of the stock reflecting a multiple of the earnings. What are your thoughts on selling 9, 16, 25, 50 CCs at market open tomorrow? I mean, I already sold my cover calls. They're pretty far out of the money. Uh, Risky. Super. Obviously, selling that close to the money is super fucking risky. You're taking a big chance, right? You're selling at 0.4 delta. There's a 40% chance that the call will go into the money. So would you put all your, GME shares on black on a roulette table? Farnicus, welcome to Dillionaire. Thank you so much, man. I appreciate it. All right, guys. I guess if that's what percentage of quarter two earnings was GME CC that you shilled to us? DRS numbers, sorry man, I know you hate it, increased by 40% over 1 quarter. That seems rather wild. I mean, it seems wild that you're assigning like an arbitrary like growth value to it. Yeah, you know, there was bullishness around the split and stuff, but that isn't the consistent rate of growth. Shares are cheaper now, so you're getting more shares probably DRS'd regularly than you were before. But it's just 27.28% of the float, right? That's it. I don't care how much it grew or didn't grow, if it goes up or down. Yeah, it's at 27.28. We'll see where it is next time. Stop wasting time with the pores. No, I like them. So GME 20, I have no idea what the price will be at open. We'll see how pre-market reacts. A lot of the price is probably going to be determined by whatever, you know, equity futures and stuff do overnight. Remember, you know, if the market tanks, GME is going to come down with it too. Do you think Ivy will crush tomorrow? Probably a little bit, yeah. Ivy at close looks like it was about 120%. The move up will spike it a little, and then the lack of a serious move up will mean it will probably drop. So if it opens up, it'll be elevated at market open, but will probably drop off into the rest of the day. If it opens down from where it is now, it will probably just remain pretty low from market open onward. Ivy didn't even move up significantly since earnings were announced. To be fair, it's been fairly static. It doesn't impact Rev. Ivy at 120%. What strike are you looking at for that number? What I'm looking at the Ivy 30. The Ivy 30 is the average of at the money implied volatility for 30 days. Thanks, Idaho Beef. All right, guys. Thank you so much. If you have any more questions, feel free to ask me on the stream tomorrow, and I will see you guys all tomorrow morning. All my 31 CCs are safe. Suck it. Thank you, Walken. Have a good night, everybody. See you later.